Voice of Forex Market Wrap-Up Show. I'm your host, Andrew Spanton, with today's Market Wrap-Up. What a day! Euro, dollar, reversing completely after Jean-Claude Trichet coming out. Didn't give us what we wanted, though. The reversal, I think, had a lot more to do with things we're going to talk about a little bit later, but very important to understand what went on today. And some of it a little bit confusing, some of it makes a lot of sense. But again, we spoke about this yesterday, about the possible sell in the news scenario with the euro, and sure enough, I mean, because, listen, Trichet came out, he said exactly what he's been saying all along. Price stability, the most important thing to me. I think he should learn a little bit better English, but basically, he said the same thing he's been saying over and over again. Price stability is the most important thing to me, and that's the first thing he said in this news conference. He was asked something specific, which I haven't seen him ask before, about the euro-sterling rate, euro-pound rate. And he said he's very concerned about it. We did see the euro-sterling sell off right after that. So, again, London, ECB left rates unchanged. London cut rates by 25 basis points. The statement out of London was pretty much mixed. They're still concerned about inflation like we thought they would be, but they do have serious problems. There are some rumors out there that Bank of England's going to announce some sort of credit facility that could help them, alleviate this mortgage problem, funding of mortgages problems that they have. So I think that that's going to be very interesting to see if that does occur. But barring any of those news, euro sterling looks like it may have reversed here. Certainly certain levels have to be breached. Taking out today's lows can be very important with euro sterling. And I think you look at euro Canada, euro yen, euro reversed across the board. Certainly other commodity currencies, other currency pairs did not do the same thing. Dollar Swiss, what a move in the Swissy. Oh baby. Pound Swiss looking very interesting on the upside. Big hammer there. But turning more to macroeconomics, I'll talk a little bit more about fundamentals. And I don't want to go over. I'm sorry about yesterday's show. I just can talk and talk and talk. I don't know what my problem is. Well, I know what my problem is. But anyway, the most important thing to understand about today's action, again, we had lots of different data coming out. Obviously, the ECB and the Bank of England were very important. But certain comments. Goldman sucks, for example. Goldman Sachs, did you realize Goldman Sachs gets 63% of their revenue from trading? From trading. Do you know that Goldman Sachs yesterday came out and said 39%, they had an increase in their level 3 assets. Those are their subprime, I don't know if they're subprime, but level 3 assets that are very bad creditworthy. They increased it by 39%. What? Goldman Sachs? You know what they did today? They just said the credit crunch is almost over. We're in the end of the third quarter, beginning of the fourth quarter. I guarantee you those 39%, they just increased in their subprime assets. Basically what happened? They probably went up by 10%. Is it market manipulation? I would say yes and no. Because again, the idiots that want to follow Goldman Sachs, go ahead, follow Goldman Sachs. So it's not their fault. Everyone just loves Goldman Sachs. They want to follow their traders and their trades. So it's a self-fulfilling prophecy. Once Goldman Sachs' reputation goes down, then maybe we're talking. But until then, it's like when E.F. Hutton talks, it's just unbelievable to me how manipulative they are. For them to come out with that statement today, after saying they increased their subprime of their level 3 assets by 39%, incredible statement. But I think that had something to do with it. I think we had the auction by the Fed. That only came in at $26 billion, and 25 it was Bear Stearns. But of the $50 billion, 30 there was demand for 36 some odd billion. They just didn't meet. It wasn't at the right price. So very interesting. And again, everyone wants to talk about the credit crunch is over. It's all done. I don't believe it. No freaking way. It's not over by any means. We might have a lull. The stock market looks like it wants to break out higher. If you take a look at the chart on the Dow, the stock market definitely is flagging to the upside. Yeah, we sold off today. The financials were weak today. They were. But it looks like the Dow does want to push higher. So in the short term, I think carry trade will probably go higher. Triple roll last night, baby. Hopefully you know what that is, and hopefully you made money because we cleaned up. And again, to find out more about that, you got to go to my premium service. But truly, an incredible night for triple roll Wednesday last night. But I got to keep my time right. I think I have like 3 minutes. So getting into what's going on as far as other areas of the market. Again, the Dow's looking pretty bullish. Gold was down today. Oil was down today. Demand from the U.S. U.S. trade balance. What the hell went on there? It was a huge number, like negative 66 billion. Look for negative 56. They're saying autos. We're importing autos. That doesn't make sense. How can we be importing autos? We have a weak dollar. We're buying autos from Japan when the yen, dollar yen's going down? It's crazy. Something doesn't make sense to me on that at all. And if inventories are going up like they're saying, that this number was a fluke, but again, with rising oil prices, that does send the trade balance higher. So that does make sense. But autos they're going to blame the trade balance on? So maybe the stock market, maybe the markets are thinking that they will, a stronger trade balance, a weaker trade balance, meaning we bought more things from overseas, could be mean the consumer's back. Get real. The consumer is dead. There's no credit out there. Banks aren't lending. Other news, these leveraged buyout firms, the banks, they're committed to funding some of these leveraged buyouts. Basically, we're able to get rid of some of those funding concerns, and they found funding elsewhere, so they got that liability off their book. That was also good news. So there was some basically general good news, and I think, again, that's why we had the carry trade, the Swiss franc sell-off, we had the yen sell-off. Those are the big two funding currencies. Maybe that's one of the reasons why we had such a big rally. Will it continue? It does look like we have some nice hammers across the board. Sterling yen hammer, dollar yen hammer, euro yen not really. Euro yen still looks very weak to me. Commodity currencies looked very strong today. I told you, didn't make sense. Maybe they sell off tonight. I don't know. If the dollar rallies, I think that these things could be a nice trade. If the dollar rallies. Euro dollar, certainly we do have some economic data coming out tonight. Very small though. Okay, not much data, but G7, that's the big deal tomorrow. Fed's Fisher speaking, I think at 9:30 in the morning tomorrow morning. Remember, he's a big hawk on inflation. So if he talks tough about inflation, you might see more of a dollar rally on his comments. And the G7, I think part of the rally in the dollar today also was due to the fact that if the dollar was going to be very weak, I think the G7 was going to come out with a strong, seven nations were going to say, we're in favor of a strong dollar. The U.S. economy is okay. It's going through a rough time, but the fundamentals are sound. The U.S. economy is strong. Boom. Something like that. So I think that also had something to do with it. So G7 remembers all day tomorrow. I think there might be some comments about that going forward, meaning comments statements from the G7 that will move our market. We do have consumer confidence coming out of the U.S. at 10 o'clock a.m. Eastern. Besides that, really isn't much data tonight that's going to move our market. It's more going to be the stock market. It's more going to be any comments from the G7 and the like. Remember, I have a premium service, and feel free to email me at info@globalfxllc.com, but you got the link right there to Voice of Forex. You can try out my premium service basically for free for a week. So to check that out, feel free to give that website a try and sign up. By and large, again, Bush spoke today, Paulson spoke today. That's really it for my notes. But this Goldman Sachs just pisses me off so much. You know how much money they made on that call of their own? Ridiculous. Market manipulation. Bush, we're going to stay in Iraq a little bit longer. That's should not be good for the dollar. But again, I think gold, oil going to be very important to watch tomorrow. G7 is going to be talking. Again, remember, Ben Bernanke has been so wrong about inflation. He thought oil was going to come in. Oil's going up. If inflation continues to go up, rice, do you realize that the possibility if rice continues to go higher, there will be social unrest? Countries will fall. It's the poor person's food. 60% of caloric intake is rice. So, we have massive inflation here, people. And again, paper pushers. If you're a paper pusher, you're going out of business. If you got stuff, that's where you want to be. So any manufacturing, we should be farmers. We should be gold miners. These are the areas of the economy that are doing well, exporting our stuff, whatever we got. So anyway, thanks for listening, and hopefully you enjoyed the show. And again, tomorrow should be a very important day. Watch for that G7 statement, and watch for that Fed Fisher comment, as well as consumer confidence. 10 o'clock could be a market moving for the stock market. That should influence Dow Yen. If you don't know about Dow Yen, you should. So feel free, again, check out my website, sign up for my premium service, email me with any questions. Thanks for listening.